In crypto, we rarely come across a project with a live, large-scale enterprise use case. So not just a proof of concept, but an actual live use case. In this video, we'll look at actual evidence of this on Hedera. So not just announcements and media articles, but actual on-chain proof of this on Hedera. We'll also look at supply and demand of HBAR tokens and how it can affect your investment. Looking at the current distribution of HBAR tokens, a total of 50 billion HBAR was minted, and no more HBAR can be created. Now, out of that 50 billion, roughly 72% has been released and is in the current circulating supply. Out of the 72%, more than half is locked in staking by the governing council members, and roughly 0.2% of that has been essentially burned through transaction processing. The remaining 28% of HBAR has not yet been released into the market. Now, out of the remaining 28%, half has been allocated and is to be released into the circulating supply on a monthly basis. The other half is currently unallocated but earmarked for ecosystem growth purposes. Essentially, by the end of 2025, you can expect full allocation and the full unreleased supply to be in the circulating supply. So what this means for your HBAR investment is that the active circulating supply of HBAR will be inflated until 2025. So assuming the market cap stays the same, this means that inflation from this distribution will erode the value of your HBARs, which stands at an average inflation rate of 4% each month. However, after 2025, HBAR turns into a deflationary currency, similar to Bitcoin. So you can expect the value of HBAR to increase based on upward buying pressure. This is based on the actual utility of HBAR tokens. However, if this is all based on the utility of HBAR tokens, what utility does the HBAR token actually provide, and where is the demand coming from? Now, HBAR tokens are required in any transaction on the Hedera network. They serve as a utility token and also a cryptocurrency. So as you can see here, transaction fees on Hedera are broken down into a node fee, which is paid to the nodes, a network fee, which is paid to the Hedera treasury account, and also a service fee, which is also paid to the Hedera treasury account. On top of that, there's also an application fee, which is paid to the actual app developers. Now, the HBAR paid for network and service fees move into a Hedera treasury account, where essentially you can consider those HBAR as burned and no more in the circulating supply. This means that the more transactions that happen on Hedera, the lower the supply of HBAR tokens, and therefore the greater the value of each HBAR token, following simple supply and demand dynamics. But how many transactions are actually happening on Hedera right now? So looking at on-chain data, we can see that since the creation of Hedera, Hedera has done 56.7 billion transactions. If we look at data for this year alone, we can see that Hedera has done 19.8 billion transactions. If we compare Hedera to other L1s, we can see that Hedera has roughly done 15 billion more transactions in this year alone compared to any other L1. Now, obviously, this is really great to see as a Hedera investor, but of course, these transactions don't mean too much unless we actually understand what these transactions are. Transactions could be from bots or wash trading, so we really need to understand what these transactions are. So let's look deeper into Hedera's on-chain data, and I think you are really going to like what we're going to find. So looking at Hedera's on-chain transactions here, we can see a breakdown. This is the data for this year alone. We can see that majority of transactions are coming from HCS, which is their Hedera Consensus Service. Hedera's Consensus Service is basically their core offering to enterprise. It is useful for all kinds of use cases within supply chain, IoT, finance, and things like that. Now let's dig deeper into these Hedera Consensus transactions and see what is actually creating them. Now on this Explorer, we can see the HCS transactions broken down, and we can see that majority of those transactions are coming from a single topic ID. Now I looked deeper into this topic ID, and basically I looked at the topic ID, who created it, who funded it, and tracked it all the way back. And what we can see here is that it actually tracks back to Avery Dennison, which is a massive company worth $19 billion. And this is a specific topic ID related to their Atma.io use case. Now you can track this back yourself, and this is the cool thing about blockchain. You can actually just see this all transparently yourself on chain. Atma is essentially a digital product passport solution, which provides end-to-end transparency on products right back to its raw materials. Now this is important for several things, such as supply chain efficiency, consumer engagement, and sustainability. Now, after reviewing so many projects on this channel and also in my personal time, I have rarely come across a project with a live use case that you can actually see on-chain proof of. So this is just so cool, and Hedera investors must be so happy about this. This is also just the beginning. There are 30 billion items that they will be tracking. And after watching a couple videos, Atma.io says that there's an average of 15 updates per item. So if we assume this is over the total life cycle of a product from production to the end consumer, let's call it 3 months, then this should ramp up from 4 billion transactions to 150 billion transactions per month. As you can imagine, this will mean a lot of transaction fees will be paid and effectively removed from the circulating supply. Furthermore, this is just only one enterprise use case on Hedera. There are several enterprises that are actively building on Hedera. Now, apart from the utility of HBAR tokens, another way HBAR value can increase is demand from staking. Now, as a HBAR token holder, you are able to do what they call proxy staking. This means that you lend your HBAR to a node operator to be included in the network security process, and you earn a portion of transaction fees as a reward. Now, again here, following simple supply and demand dynamics, the greater the demand for staking, the more supply of HBAR will be locked up in staking, and therefore there will be greater upward pressure on the value of each HBAR token. So currently we know more than half of the active circulating supply is staked by the governing council members and also community proxy staking. At the moment, the rewards are not too attractive at the moment. Now this can potentially change after Hedera releases community nodes. So at the moment, you are not able to set up your own node. You need to be part of the governing council. But after they release community nodes, then essentially any business or individual can set up their own node and start earning staking rewards. Now, this may then change the staking reward rate to incentivize those community nodes to get started in the first place. So this is due to be released when the governing council has reached 39 members. Currently, it stands at 32 members, and they have been roughly adding council members at an average rate of 2 to 3 per year. So based on that, we can expect community nodes to be released sometime between 2026 and 2028. Now, finally, let's look at the ICO and any other risks that you should be aware of. Now, firstly, the Hedera ICO was very clean. They raised money through the issuance of simple agreements for future tokens, or SAFs. These are contractual investment agreements that allow accredited investors to finance a crypto project in exchange for tokens. Now, under this arrangement, the SAFT is considered the security, not the tokens. Using this setup, Hedera essentially complies with securities laws, so there is no future risk of Hedera being sued by the SEC or things like that. Looking more deeply at the distribution to founders, Lehman and Mance, they both have 5% of the total supply each. Now, this is pretty large allocations, and the concern here is downwards price action on HBAR if the founders decided to sell. However, I find it hard to believe there will be an actual cause for concern. You know, after watching interviews of both founders, they both seem committed to the project. It wouldn't make sense for them to dump their tokens. Also, if they do decide to sell their tokens under the agreement of their SAFT, they must disclose publicly a selling plan at least 30 days before they actually do decide to sell any of their tokens. This is designed to avoid flooding the market, and it just brings peace to mind knowing that they will be transparent on when they will be selling their tokens. Now, these are the other allocations of the unreleased supply. All of these allocations are gradually released each year until the end of 2025. This helps protect HBAR holders against rug pulls and incentivizes the current team and ecosystem. Now, these allocations are relatively balanced with a focus on ecosystem growth. The main risk lies in distribution of the ecosystem funds. However, the Hedera team is very transparent. They actually post their governing council minutes online, and the community is able to take part in decision-making processes on Hedera's GitHub, Discord, and other community forums. So let's just recap all of this, guys. So HBAR is essentially released into the market at an average inflation rate of 4% per month until 2025. So after 2025, you can expect greater upwards pressure on the value of HBAR tokens from the actual utility of their tokens. We also know that there could be some new community node feature coming sometime between 2026 and 2028. And that is when the demand for staking may also rise. So putting this all together, we can expect that sometime between 2025 and 2028, there will be more consistent upwards price action on Hedera based on the demand of HBAR tokens, not just speculation. We can currently see there is actual on-chain proof of a large enterprise doing things on Hedera, and this is just massive. Have a look at it yourself at atma.io. It's super cool. And also, just to round this off, the ICO itself was very clean. There's low risk of being called a security. All the early investors and founders have a strict distribution schedule, so there's little risk of them flooding the market or any rug pull type of activity. They are legally required to show any movement on their HBAR. Okay, so that's it, guys. Thanks very much for watching and tuning in again. Hope you liked the video. If you have any comments or feedback, just drop them in the section below. I look at all comments. Really appreciate you watching my video, and yeah, I'll be back next time. So catch you later.